Anand Tandon, Director of Equities at Brics, joins in to talk about the market now. Morning, Anand. How are you feeling about the market these days at 5,500 again? And what did you make of the mild bout of volatility which we saw last week?
Well, then I don't think that there is any clear signal that is emerging from the market, either locally or in the international markets. I think depending on what time frame you look at data or what data you look at, you can pretty much be either bullish or bearish. Clearly, the valuations are at a level which, while not excessive, are not comfortable. And at the same time, there is still a lot of money coming into the system. So, the conflicts are very clear. But the direction is not. So, at this stage, it's very difficult to take a bet on the market in either direction. The only thing you can now look at doing, perhaps, is to extend the period over which you are looking at the investment for any stock, because clearly the near term, most of the upside is perhaps in the price. And the downside, if it all will come in the form of risks, which is difficult to quantify. So, you have to really look at the companies on a 3 to 5 year perspective rather than 1 or 2 year perspective.
Can you see any pivotal event globally which can lend a major trigger to the market's direction? I mean, we keep talking about these weekly events like GDP data, unemployment data, but anything globally which you think has the potential to actually alter the course of markets as we are seeing it now?
I think people are confused in terms of knowing versus so-called discounting. Let me elaborate. Just because we know that the European economies are in bad shape doesn't mean that we have factored that into the prices. What we have chosen to do instead is that ignored it. Again, if you look at some data, the CDS spreads in most of the peripheral European states have started to move up. We've had almost $1 trillion of bailout from the European Central Bank in June, and the markets have gone nowhere from there. So clearly the fiscal armory that the central banks have become somewhat blunted in terms of their efficacy in moving markets. And at the same time, the issues of joblessness, of lack of growth, of potential deflation, of credit growth not happening or the banks not being in a position to lend, all of it is there and is increasing. The fact that, for example, some countries in Europe are today talking about not allowing shorts tells you that they're preparing for a significant downside from here. So all I'm saying is that just because we've kind of agreed that there is an elephant in the room doesn't mean that we have done anything about it.